Thanks so much, Manyi. So walk us through these results and what stands out. It seems like a relatively decent report card overall, despite the fact that HSBC still missed expectations here.
Yeah, I think that HSBC's third quarter result is, like, as you mentioned, is slightly below the expectation. But if you look into the lines, I think for most of the lines like revenue, NII, NIM, and ECL, those lines are largely in line with the expectation. And I think the downward surprise is mainly from the cost line. Like the third quarter cost was up by 1% year on year to around $8 billion, and that is a little bit above the market expectation. And this is mainly because higher performance-related payment. I think this is kind of a reasonable higher cost, given that the HSBC is delivering quite high ROTE, like 17.1% for the first 9 months of the year. And the bank has also revised up their cost guidance from 3% year-on-year growth for FY23 to like 4% year-on-year growth. And that is also mainly due to higher performance-related payments to staff. And I think this is a kind of reasonable change. And this is not a very material or a very negative, surprising cost change. So I think the negative impact on share price performance is limited.
So as we enter this environment of what many expect to be higher for longer interest rates, what impact do you expect that to have on HSBC's net interest margins moving forward?
Actually, I think the impact from the higher for longer interest rate environment is limited. Like we don't expect further very high further margin expansion in the next few quarters. You can see that the NIM was actually down by 2 bips in third quarter, like 1.7% for HSBC. And I think that is like looking ahead, you can see that in Hong Kong side, even if the Fed fund rate is increasing, you can see that the HIBOR remains highly volatile in Hong Kong market, and the funding cost is also going up. So I think looking ahead, I don't really expect a very huge margin expansion in the next few quarters. Maybe the NIM to peak in the second half of this year, and in FY24 and 25, I was actually looking for a kind of flattish NII growth for FY24-25.